there's anyone bad, we're going to kick them out.
I'm live right now, by the way. Hey, everybody. Let me know if you can see me, if you can hear me. Can you see me?
Yes, I can see you, but let me see if I can see me. Yeah.
Okay. Hey, everybody. I'm going to pull up my chat here. Pull up my chat on that. Welcome to the session today. Usually we join each other here at 3 o'clock Eastern. But I have some visitors. Actually, I have my 1,000th subscriber here, Maya. And of course, my daughter is helping me with the technology because I am not good at technology. And so we're doing some things later on today. So I changed the time to 10 o'clock this morning. So let's see, do we have people on already?
Yes.
Okay.
We have two. Wait.
All right. Well, thank you for being here. And if you can't be here or if you're not seeing it live, as always, you're going to see the recording in YouTube. So we're going to get started. I'm going to go through questions and answers. Today's Monday. Last week I had a put. I think it was a Mara put, if I remember correctly. Oh, thank you. Where's the chat on there?
This is the chat.
Oh, good morning, Queen. Thank you. Thank you, Sportsman261. Nice to meet you. So this morning, what we're going to do, as always, I want to start with where we were last week, what we're going to do today, and then go through some Q&A. I want to give value to you guys. I want you guys to learn how to create income for yourself so you don't have to perhaps work so much, or you don't have to maybe work at all. And you can create your own systematic income that you can depend on from week to week. So that's why I'm here. I hope that's why you're here, and hopefully I help you do that. So last week I had that $10 Mara put, and it got assigned. So what does that mean? Let's just kind of break it down from the beginning for any of the new members that are out here. I had sold a $10 Mara put that expired this past Friday, and that meant that if Mara closed under $10 on Friday, I would be assigned those shares, meaning I would be required to purchase 100 shares at $10, which was the strike price, and now I own 100 shares of Mara. And I'm okay with that. Did I freak out on Friday? No, because I'm okay with owning 100 shares of Mara because now I'm going to sell a covered call against those shares. And that means that if the shares go higher than where I bought them, which was $10, I'm going to sell the shares, and for that commitment for selling my shares above my basis of $10, I'm paid a premium. So let's take a look and see where Mara is trading. So first of all, what we do first is we kind of take a look at the chart, right? So there's only two charts that I use typically. I'll use a 1 year, 1 day chart, which is right here, 1Y, 1D. And just as a reminder, or for any of the new people out there, the platform that I'm using is Think or Swim on Schwab. There's lots of different platforms that you can use, and they all kind of give you the same information, but it might look a little bit differently. So I look at the 1 year, 1 day chart. So here's where Mara has been, and Mara's really down right now because it's a Bitcoin stock, and Bitcoin is down at the moment. I personally don't care that Bitcoin is down because all stocks, including crypto stocks, go like this, right? They don't just go up straight to the moon, and they usually don't just fall and go bankrupt or anything either. And they chop around. So chopping around, oh, look at this. It's like ads on my iPad. I'm watching this live stream from a second device to see kind of what you guys see, so I can be a little bit more knowledgeable. But like I was saying, all stocks go up and down, and they have volatility, which is good because we know a couple things. Number one, volatility gives us more premium when we are paid to sell an options contract, whether it be a put or a covered call. And then secondarily, when it has volatility, I'm pretty comfortable to know that, okay, if it goes down, it's going to go back up again. So I'm fine with that. So this is the 1 year chart. I'm also going to look at a 1 day, 1 minute chart. And we can see this morning it popped way up. Now it's kind of coming down. The gray part is aftermarket hours. So the black part is during live trading between 9:30 and 4 Eastern time. And the gray part is when people in the US are sleeping and other countries are trading, where that stock is going. So what I'm going to do is pull up the options chain. So that's this page here, the trade tab, right? And this gives us the listing of expiration dates, right? So me personally, I like 1 week expiration dates for 2 reasons. I want to create weekly income, right? Because I have stuff that I want to pay for and commitments that I need to do financially. And number 2, I don't want to tie up my capital for an extended period of time. You have to decide what works for you. Sometimes other people will do 2-week contracts or 4-week contracts or 2 months or 1 year. The longer you go out, the more premium you're going to make on that contract, but you're going to tie up your capital for a longer period of time. And I don't like to do that. So I'm going to look at January 2nd. Now remember that this week is a short week. So the premium that we're looking at here is a little bit lower than what it usually is because there's a day missing because the market's closed on New Year's Day. And also the market might close early on New Year's Eve as well. I'm not certain. I'd have to look that up on the New York Stock Exchange page. But in any event, these premiums are a little bit less than they will be next week, all things being equal. So I own the stock for $10. However, and let me show you a couple things that are pretty useful. This is the account here, right? So here's my Mara 100 shares at my cost per share of $10. Tomorrow morning, this is going to be adjusted to go down a little bit to reflect the premium that I got paid for selling that options contract. Now, if I wanted to check that amount ahead of time, what I can do is I can go into the transaction history. And here is here's my assignment, right? So it's just sorted in order. That's my Mara $10 put that was assigned this past Friday. There's my buying of 100 shares. And here's my original trade, sell to open. I made the trade on December 22nd. I sold a Mara $10 put expiring 12/26, which was this past Friday. Merry Christmas to all you guys out there as well, and Happy New Year coming up. And I got paid $26 for doing that, 0.26, but each contract represents 100 shares, so $26 got dropped into my account just for committing to purchase 100 shares if the price went down, right? So tomorrow, let me go back to my positions. Tomorrow, instead of seeing $10, let me pull up a calculator. Actually, I have a calculator open already. It's going to be $10 minus 0.26. My cost basis will be adjusted to $9.74 tomorrow. The reason I say tomorrow is because there's always some sort of delay, depending on the broker-dealer that you're trading with. Schwab does it the next morning, Tuesday morning. If you're trading with somebody else, it might be slightly different. So my cost basis will be, as of tomorrow moving forward, $9.74. So what I'm going to do is sell a $10 call, right? Now the $10 calls are 14 bid, 15 ask. Here's what that means, guys. If I put an order in to sell it at $14, which is the bid price, it's going to fill right away, and then that $14 will get dropped into my account right away. So let's walk through that and do that together. Now it's down a little bit, just to kind of explain and walk through everything that we're looking at on the page. And the value of these live streams is that I'm going through an actual live account with you guys, right? So I'm not showing you a paper account. I'm not showing you hypotheticals or clicks based on scenarios that aren't real. This is a real account, and that's the benefit of that. So the net change is where it is today relative to this past Friday. So it's down a little bit because right now the underlying Mara, the stock itself, is what we call flat. It's like kind of where it was trading on Friday. If it was up significantly, I would get more money for selling a covered call. If it's down significantly, I would get less money, right? So you're going to want to understand and learn those changes. So what I'm going to do is I'm going to click on the bid, and that brings up my order entry box. So I am selling one Mara, January 2nd, $10 call at a limit price. I'm always going to use a limit price of $14. I'm going to hit confirm and then send, and then my fill is in the upper left-hand corner. Now, what we're going to do always, so this is best practices, guys, and believe me, I'm showing you exactly what I do on my other accounts. So I'm walking through step by step to show you exactly what the process is. And this works for any size account, whether you have a small account, like I'm showing you here, $5,000, or you have $500,000. It doesn't matter. The biggest difference between using a small or trading with a small account versus a big account is the tickers. Like obviously, because this is only a $5,000 account, I can't, let's say, trade Tesla or something like that because I don't have enough money, enough capital to support a more expensive ticker. So let's just refresh this page here. So I'm going to click this little refresh button. And now we can see our short call. So here's our Mara January 2nd, $10 call. -1 means we sold that call, right? We're never going to buy options. Buying options is for suckers, for people that want to gamble. They want to, like, you know, guess the direction of a stock and 10x their money, you know, invest, let's say, $10 or $20 and make $200. You might be right, and you could make money that way, but it's not sustainable in my view. And alternatively, I try to swing for singles. I just want to make a little bit of money ongoing. Now let's calculate our rate of return on this trade, because that's always good to do. We don't want to look at, okay, I made $14. Like, who cares about $14? But we want to look at the percentage rate of return. So I made $14, and how much capital am I putting up for the trade? Well, if I own the shares for $10, right, and I own 100 shares, 10 times 100 is 1,000. So $1,000 is my capital that I need to maintain this position. So I'm going to divide $14, which is my premium that I'm earning, divided by $1,000. And I'm making 1.4%. But guess what? That's only for 1 week. So listen, I'm showing you in all these videos, not just doing this trade on this ticker or that trade on that ticker, but I'm showing you all kinds of different tickers in my YouTube channel. Expensive tickers, cheaper tickers, different types of sectors, Bitcoin companies, not Bitcoin companies, AI companies, energies, blue chip type strong companies, all different types of things to give you different ideas, and you can use those ideas and recreate exactly what I'm doing. So the process is the same. It works the same no matter big account, small account, this ticker, that ticker, whatever. And I'm illustrating that to you. So going back to our rate of return, making 1.4%, I'm making that for 1 week. So if I do a trade like this every week, how much am I making per year on an annualized percentage? Well, I'm going to multiply by 52, right? Because there's 52 weeks in a year, and I'm making 72% on my money. Like, listen, all these trades that I show you guys, they're different, right? So sometimes you make 30%, sometimes you make 50%, sometimes you make 150%. But I'm showing you all these different ideas to give you a sense of what's out there and what you can create for yourself, right? So there's that. Let's see if we have any questions. I think there's no questions yet. Let me know in the chat if you guys have questions as we go, because I want you guys to learn, and I want to deliver the content that is helpful for you guys. So on this page, so I just want to clarify, here's my Thinkorswim platform. That's where I look at my charts. That's where I put my trades in, that sort of thing. And then my broker platform, which is here, that's where I look at sort of what my positions are. I want to make sure I did it correctly. I also want to look at my realized gain loss, which is here, right? So this is kind of like, okay, well, how much do you make on a realized gain basis? So oftentimes this is going to be a high percentage. Why? Because we focus on realized gains and minimizing, or perhaps not having, any realized losses. I don't care about necessarily paper gains or paper losses for that matter, because they don't mean anything. They don't put any cash in my pocket. I care about how much cash do I put in my pocket so I can go spend it and have the lifestyle that I want to have. So yeah, so there's that. So let's see. I think, thank you for the heart emojis. I appreciate that. What questions do you have? What else can I help you with? I'm not going to put any other trades in today for a couple of reasons. Number one, you know, let's see where Bitcoin, BTC price. Let's see where Bitcoin is going. Because this is a crypto type stock, Mara, it's like a crypto Bitcoin mining company. It's very heavily correlated or tied to the movement of Bitcoin. So Bitcoin goes up, typically Mara goes up. Bitcoin goes down, typically Mara goes down. we can see like a 1-year chart of where Bitcoin has been the past year. It goes up, it goes down, it goes up, quite a bit, and now it went down quite a bit. Now it's been kind of flat for the past, week or two. And that's the purpose of volatility. Now, another thing that I also look at is I want to see, like, number one, does the underlying that I'm trading, does it have weekly contracts, right? So I want something that has weekly contracts because I want to make money every week, number one. And I also want volatility. So the implied volatility is listed here. So you can see this contract that I sold has 70% volatility. So these percentages will go anywhere from, let's say, maybe 10% or 15% on something that doesn't move a lot. Maybe it's like more slow and steady, to 100% or maybe more if it has or is expected to have significant swings, either up or down, right? So the more volatility gives you two things. Number one, it gives you more premium, right? So that's why I'm getting paid $14 and only investing $1,000, and that's what I'm paid per week. Let's, just out of curiosity, let's say I went out 6 months on this contract. Let's look at a June contract, June 18th, 2026. If I was to sell the same $10 call, I would be paid $200. That last traded at $225. See, this is the last contract. The bid is $221. So that would mean if I want to, let's say, keep my $1,000 tied up for longer than a week, I can go out longer and then I can get paid more money. Now, let me ask you this. When do I get that $221? When does that get dropped into my account? That gets dropped into my account right when I make the trade. So if I don't care about weekly and I don't care about, like, let's say, tying up my money for a longer period, I might want to make more income, right? Maybe I want to make $200 instead of $14. You can do that. Like, I'm not giving you specific recommendations and saying, hey, you should trade this, or hey, you should trade this. I'm telling you what I'm trading and what has been successful for me in the past for many, many years. I've been exclusively trading, and so what I'm doing is kind of sharing with you what works. But there's lots of different things that work for different people depending on what your objective is. What I would do, let's say if you don't mind, let's say locking up your money for an extended period of time, you want to calculate what's the rate of return on a trade like that. Well, if I'm going to make $221 and I'm putting up $1,000, that's how you do it. What your premium is, how much capital you need, what's your rate of return. Now, if this is for a 6-month time frame, because this is a June contract, I'm going to multiply by 2 because there's 2 6-month terms in a year, right? So I'm going to get an annualized rate of return like this, 44%. So here's what options trading can give you. And I don't want to necessarily compare it to keeping money in a bank or at a CD or money market, but those rates are 1%, 2%, maybe 3% per year, right? So you make pennies on your capital. This is a way to actually amplify that. Now you're going to have more risk. What's the risk, Michelle? Okay, maybe Mara goes bankrupt. Maybe. I don't think they will, but maybe they will. And so with stocks, you have that kind of a risk. Whereas with banks and keeping your money in a savings account, it's FDIC insured. If the bank goes, bankrupt, the government steps in and pays people out. So that's the trade-off, right? The risk versus the reward. Another thing for me, what I would do, and one of the reasons why I'm not selling, let's say, 5 contracts, and tying up $5,000 is if the stock goes down more, I want to keep cash on the side in my account to sell another put to take in more money. And then if the stock does go down and I get assigned on those shares, then I'm buying more stocks at a lower price and I'm averaging down my cost. So that's something that you want to keep in mind. Position sizing, listen guys, position sizing is so important. And I feel like it's not talked about enough. Many people, they don't lose money in the market because they did the wrong thing or they traded the wrong thing or they necessarily made a mistake. But oftentimes it's because they went way too big for their size account. So it's important to keep money on the side. So if it does go down, I'm going to sell another put, or maybe I'm going to sell 2 more puts. And that's the best way to average your price down and then ultimately get out of those long shares. Because all things being equal, I don't really want to own shares. I'd rather keep my money in cash and drive a return via income every week off of cash instead of having to have shares. Because having shares subjects you to paper gains, paper losses. And while oftentimes I say I don't care about paper losses, if I had to access that money in that account, I don't want to have to, let's say, sell my shares and lose money. So that's the purpose of that. Now, we have some questions. I want to stop for a moment and go through some questions. So somebody said I'm going to go through. Oh, and I love the crowns. I see questions with the crowns. I have this membership program on my Discord. I want you guys to be more active with my Discord channel. So the purpose of the membership is to create a community for like-minded people. It's so important to like sync yourselves and align yourselves with people who think like you, because you become who you hang out with. And so I have this Discord community. It's only $5, and I'm not here pitching anything. I mean, $5, I make $3.50 a month. This is not a big money maker. It's more to provide a community for people to talk with one another. So I think that's what these crowns mean. So I really appreciate that. And I want you guys to be more active on that Discord. So somebody had said, oh, thank you for the love. I love it when people send the hearts. I appreciate that. Thank you very much. Seeing you trade this step by step is very helpful. Yes, it is very helpful. Yeah, I appreciate you appreciating that. So it's good to see it live. Let's see. Is there a certain volatility that is best to stay above? So that's a really good question. And let me answer that. So I personally like volatility above 50%. Now that doesn't mean that like I don't ever trade something that's like 40% or 45% or something like that. But personally, that's kind of like, I guess you might say my sweet spot is over 50%. Now also you want to keep in mind that volatility will be amplified right before earnings are announced. So let me talk a moment about that. So all stocks will have earnings typically on a quarterly basis, and that's when they provide, information to the public, specifically their investors, right? People invested in their company, and they talk about, okay, here's what the company's doing, here's what we expect moving forward, here's what we did in the past, and right before earnings, volatility will be higher. Now, volatility, when these events happen, upcoming earnings, it does present an opportunity to make more money, but it comes with a little bit more risk because you have more expected swing, whether it be up or down. Typically, if you're new at trading, you might want to stay away from that. So whatever you're trading, just always double check. And here's how you would do it. You would just open a Google window, Mara next earnings date. So I just pull that up here. And this, usually AI is pretty good. The next earnings for Mara is February 25th. So let's say instead of February 25th, this said, January, 3rd or something like that. I might want to wait and not put a trade in until after earnings. So that's something to keep in mind. But in answer to your question about the certain percentage, typically I look for 50% on up. Let's see. Could you take a look at RZLT? Yes. I think that is our little biotech company. RZLT chart, and let's go to a one-year chart. So this is an interesting stock. Somebody, I don't remember who it was, but there was somebody that originally brought this to my attention a couple of weeks ago, and it's a biotech company, and it had significantly high volatility. And when you look at the chart, it was like, holy cow, it looks like it's like slow and steady for a long period of time, and the premium was paying so much money. And the reason for that is because it had a lot of risk in the sense that, this being a biotech type company, I think they were just like everything was like hinged on one FDA drug. And oftentimes they need this FDA, clearance for their drug to, launch, that kind of thing. And something did not go well. And the stock dropped from, when did it drop? December 10th, and it went from, we can see the line above. So this line here shows you your like open, high, low, close. So if I hover on that day when prior to the stock dropping, we can see the date on the bottom, December 10th, and we can see it went from like a close of $10.94, and then it opened the next morning at $1, right? So it like fell like a rock. Here's what now I'm not trading RZLT. I thought about buying it actually, but I just haven't. In all honesty, I've been super busy with a lot of other things. It's holiday time, spending time with my family and other people that are important to me, and also like back and forth, LA, New York. And I'm spending tons of time working on developing applications that I'm launching soon to help traders. So personally, what I'm saying is this. I was going to put a trade in, but I just didn't. I didn't want to have time to watch it. But I would buy this probably. And maybe I might buy this in this account. I'm not sure. But here's why. I don't know a lot about the stock, but this is a significant gap. And when you have a gap in the chart is this. The stock is trading here, and then it falls, on the overnight market here, or it goes the other way. Maybe it's trading here, and then it jumps on an overnight market. And it creates this black space in between. So that's a gap, right? And typically, gaps will fill. And you'll see, like, from where it dropped to a low of $1.07. Well, right now, it's at $2.51. So off the low, it's more than doubled. If I look at this stock from a technical standpoint, I don't talk a lot about technical indicators and such on the channel, but although sometimes I talk about certain ones and gaps are included in that. This is a very bullish kind of anticipation, you might say, because it's expected to go up. So that's what I would look at for RZLT. Now, I wouldn't really look at it for options, although I suppose you can. First of all, it doesn't have weekly options, right? But if you look at, let's say, January 16th, the next monthly option, if you look at, let's say, you could, a $2.50 put, well, that's paying $25. Now, if we look at a $2 put, it's a very wide bid to ask spread. You'll see bid 0 and 75 ask, and it last traded at $9. Those are hard to trade. When you have things that have like a wide spread, there's not a lot of people in and out. There's not a lot of activity, and they're not good because you get what we call like slippage. They're harder to get in and out. But you could do, let's say, a $2.50. Let's calculate this rate of return. I mean, this is going to be high risk as we've seen, but you'd make $25 is the bid, right? So $25 on this contract, you're only committing $250 because it's a $2.50 strike, right? So divided by 250. That gives you a 1% rate of return, and you're holding it for about 2 weeks because it's January 16th. So if I just do rough math times 26, I'm making 260%. But it's gonna be highly volatile and a bit of risk. See, the implied volatility on this contract is 126%, right? So significantly high. But yeah, this is that's kind of RZLT. Now let's say if I traded it back then, because I almost did when this guy was talking about it on my YouTube channel. If I had, let's say, 100 shares at $10, what I would do personally, and again, this is not, specific recommendation because I'm not here to give investment advice to the public, especially without knowing what you're looking to accomplish. But if I had 100 shares at $10 and then the stock dropped to $1, you could do one of two things. You can just say, well, actually, you could do one of three things. You can just say, let me sell my shares and lose that $1,000 that I had invested. Typically, I don't do that because that creates a realized loss, right? So that's not really good. Or you can do nothing, right, and just wait for the stock to come back up. But if you lost 90% of the value, the stock has to come up like, I don't even know what the number is, like 800% or something to get back to where you started, right? Or number three, you can buy more and average your cost down. So like, if I owned 100 shares at $10 and then it went down to $1 or $2, maybe I buy 300 more shares, or maybe I sell three $2.50 puts. Take in $75. If it stays low or drops lower, I buy more shares. I average my cost down. Now, of course, the risk is this stock can go to zero. Maybe. I mean, I don't know. I don't know a lot about the company. But if I traded it initially, that means I believe in the company. So typically, I would sell more puts, and if assigned, average my cost down. So hopefully that's helpful for you. let's see. Nikki had said about RZLT, it dropped significantly, and I got assigned with 2 contracts at a strike of $7.50. So yeah, Nikki, what I would do, and again, not specific investment advice, assuming you have more capital, because really you don't ever want to make the first trade without keeping money on the side already earmarked to buy more shares if the price goes down. Nikki, you can sell a couple more with a $2.50 strike. That's the best way to turn a losing trade into a winning one. So hopefully that helps. Irene dropped. Let's look at Irene. I never traded Irene either, but that's an interesting ticker as well. So Irene dropped from $48 strike price to 40. Can't keep averaging down. It's a small account. Yeah, so that is one of the downfalls to having a small account. One of the applications that I'm working on, and this isn't a pitch, but I want to share with you, because I don't think this exists in the marketplace at the moment. And if it does exist, like, fill me in, because I would love to pay for it myself, is some sort of application that helps a little bit more mathematically. Okay, I have $5,000 and I want to trade this ticker that's X dollars. And here's where I'm starting. Like how, okay, if it goes down, when should I buy more? Because we don't know where the low is until after, right? We don't know where the low is, or the high for that matter. So I'm working on some applications that help people a little bit more mathematically prepare for those types of moves. But in the meantime, if you can't afford to, sell more and average down, you could also, here's what I suggest. You could also be more active in your trading. So especially when you don't really want to buy more because you don't have a lot of cash, you could, let's say, okay, Irene is $40 right now. Let's take a look and see what the contracts are. So I always start with looking at a 1-week contract. So I could say, okay, let's look at a $35 put, right? Now I'm committing $3,500. If you have a margin account, there's a little bit lower of a commitment, although margin has a bit more risk, right? So that's something else that you want to keep in mind. Now the volatility on Irene is super high, over 100%. So it's got some expected larger swings. But if you were to sell, let's say, a $35 put, you're taking in more money, but then watch that like actively. If Irene starts to pop up over the next couple days subsequently, you could buy that contract back. So oftentimes a lot of like making money or not making money, being successful or not being successful, it's a very thin line. And it's not that you're trading the wrong things. It could be that your position size is too big, but also you want to integrate some management into it. So you don't just like sell a put and forget about it. Okay, well, let me just wait until Friday and it either expires worthless or I buy the stock. No, once you, again, if the stock starts going up, the value of that put is going to go down. And once you capture a lot of that premium, you can buy the contract back, exit the trade, and then take the risk off the table. And the way you want to do that is by looking at right here. I look at the gain loss percent. So like right now, for example, I sold this Mara call this morning for $14, and right now it's trading at $13.50. You see the price. Here's the current price. Here's my gain loss percent. So this is the percent since for that position. Once this starts to be, and you have to really like figure out what works for you, but for me, once this starts to be like 70, 80, 90%, oftentimes, particularly if it's a put. Now this is a call, but particularly if I sold a put and I'm making, let's say, 90% of the total that I could make on that contract, I buy that back and then I take the risk off the table. So that's something that you might want to consider as well. So hopefully that helps. Let's see. Do you ever look at technical numbers like VIX, RSI, Bollinger Bands? No, not really. So I have in the past. The VIX is the volatility index. There is correlation with the volatility index and where stocks are moving. You could put in like moving averages, RSI, Bollinger Bands. I used to use a bit more in the past. They kind of like help you understand where the direction of the trades go. But here's what I think about indicators. I mean, they might work for you, and that's great. I don't use them for a couple reasons. Number one, oftentimes you can look at one indicator and it's like maybe it indicates a bullish sentiment about that stock, meaning that stock is expected to, let's say, go up, or a bearish sentiment. But then you might look at a different indicator that shows you the contrary. I find indicators to be too much work, too confusing, and bring more chaos. I think for me, I think it's more important to first and foremost make sure you're trading a ticker that you believe in long term, that you feel comfortable with. If it drops, you feel comfortable to buy more shares. If it goes down in value, and not care so much about the short-term price activity. Because the fact is, and this is a fact, undisputed fact, all stocks go up and down. And here's another fact. Like, I think about like logic and facts and mathematics. Not that you have to be some like mathematical geek or anything. You don't, to be successful. But I think I can't predict the direction. I don't know if it's going to go up or down tomorrow. I don't know if it's going to go up or down next week. I know this though, if I trade a good quality stock over time, that stock will go up, because that's what history shows us. And that's what I've seen as a fact. So instead of predicting, short-term price activity, I pick the ticker that I like. I sell a put that's out of the money, take in premium, and I'm comfortable buying it at the strike price if it goes down in value. And then I keep cash on the side. If it goes down more, I want to buy more shares. Like this account here. I like Mara long term. I just sold one put, right? I'm just not being a cowboy. I'm just doing it small and steady. Hitting singles every week is all. And if it goes down more, I have cash because this is $5,000 and I'm only tying up $1,000 right now. I'm going to sell another put and average my cost down. So I don't really look at indicators. Let's see. So going back to RZLT, I looked and the Analyst has it as a buy, so I'm keeping it and I'm waiting until it goes up. So I don't really look at a lot of Analyst stuff either. I find Analysts to be, if I'm being truthful, I find them to be mostly unethical. I think a lot of them are paid for what they talk about, what they say, what they suggest. And when you have somebody that's biased like that, I don't really put a lot of credence into the content that they're providing. I think buying more if it goes. I think if you like the stock and you're staying in it and you're not selling your shares and taking a loss, personally, I would buy more as it goes down, because otherwise you're going to be waiting a really, really long time for that to go from $2 back to 10. It's a much easier plan and path to take to buy more. Sometimes what we do that doesn't feel comfortable is the best decision. It doesn't feel comfortable, like innately comfortable when something goes down and we buy more. Most of the time we're buying when everybody's happy, and that's the wrong time. That's the time to be hesitant, right? So personally, I would buy more if it goes down. Let's see. How do you buy back a put? Okay, so that's a good question. So when you buy back a contract, I don't have a put in this account, but I'll show you. You're just going to do the opposite. So let's say I'm going to show you how to buy back a call as an example, and then it's going to apply to a put. So you're going to see on your position page when it says -1, that means you're short that contract. So we're always selling puts and calls, right? So it's always going to say -1. If I wanted to buy this back, I'm going to go back to my trading. I'm going to go back to Mara. And I see a couple things. So number one, I see this marker. So this is my contract. So that shows you that's what I have. If I wanted to buy it back, I'm just going to click on the ask, which is the higher. You don't have to remember bid ask. It's just the higher number. And then it's going to pull up this trading window, and it's going to say buy. Buy 1 Mara January 2nd, $10 call. And then you want to always trade at a limit price, and then you can change the price here. And then you just hit confirm and send. So that's how you would do it. And then after you do that, you want to make sure and refresh your page here. and make sure it's gone off of there. So that's something important to keep in mind. Let's see. Nikki, thank you. I have such great followers. I have amazing followers. You're one of them, Nikki, because I just read your message that said 41 people watching now. Could you all like by pressing the thumbs up icon? Thank you. That makes me feel so good that you guys are here and helping like gain awareness to me and this channel, more so than this channel. So I appreciate that. Thank you very much. All right, what other questions? I was planning on going for half an hour today, and so we're at 40 minutes. If you guys have any other, oh, and thank you for the hearts. I love when you guys send those heart emojis. I appreciate that. And remember, if you guys miss this, no worries. Just catch the recording. And I do plan at some point, as I said, my time has been a little bit busy. Listen, I want to live life on my terms. So this is, I want to be able to not set an alarm clock and get up when I want and then do things that are important to me. So like right now, my kids are here from LA. My daughter's friend Maya is visiting from Massachusetts. I'm spending some time with them. So my purpose in life, I guess you might say, is to be happy all the time and to create like experiences. And doing that means that I don't like to be stuck in some sort of like I have to do this at this time or I have to do that at that time. So that's why typically this was supposed to be 3 o'clock and I changed it to 10 so we're going to go to Central Park later and do some cool New York City type of stuff. But my intention as my time frees up a little bit is to do more live sessions and kind of walk through a lot of this as we go. But hopefully this content is helpful. Oh, somebody asked, what is your delta sweet spot? So delta, so that's a really good question. Let me answer that, and then we'll wrap it up for today's session. Delta I look at for puts, so I want to make that distinction. When it comes to selling covered calls, I don't look at delta. I just want to sell the strike price that's over what I paid for the shares. So for Mara, as an example, I paid $10 for the shares. I sold a $10 call. I don't really care about making money on the stock gain. I just want to make income because income is what's most important to me, right? For puts, I do look at delta. And really, it depends on how okay I am with buying the stock. Typically, when I'm starting like without having a position, I like to have, maybe a 30 delta, 25 delta. That gives you like a 25 or 30% likelihood that it's going to close underneath that strike price. And that balances kind of how much cash I'm going to get versus, the risk that I'm going to take, having to perhaps buy those shares. The higher the delta, the more premium you get, right? But it's also comes with the higher likelihood that you're going to have to buy those shares. Now, sometimes if I have a stock and my basis is super high and it comes down a lot, I might sell puts that has a bit of a higher delta because I want to take in more income, and I might be more okay with buying shares at that price because it would be averaging my cost down. So it really depends. But if I'm starting new, 25, 30. If you're brand new, there's nothing wrong with starting, let's say, with a 5 delta, like super low likelihood that the stock is going to go down. And then you're kind of like getting your feet wet as you're new. So that's a good suggestion as well. So anyway, I hope that helps. I want to say thank you for your time. Stay tuned. Listen, I have this application. I've been spending so much time on this application. I'm gonna show you guys kind of a let's see, not here. I'm gonna show you guys sort of like here's like a screenshot. I have this application that I'm creating. It's so amazing, and I'm so proud of it, and I think it's going to be so great. It gives you, let me show you. I'm going to give you guys a preview. So it kind of gives you like, it's like a learning application, and it makes learning fun. So it walks through lots of different things in sort of like a quiz style to teach you guys not just about investing. Like I have this investment foundations, options, fundamentals, but then I have like more advanced kind of like talking about margin, taxes, like all things options. And it's very, very cool. So I'm going to launch that soon. My intention is I want to do this before the end of the year, but I only have a couple of days left. Make sure you guys are in my inner circle. My inner circle is free. It's on my YouTube page somewhere. It's just like a distribution list where I email people that, hey, I'm launching this, or hey, I got this live event, whatever. I also have a live event coming up. I forget when it is. I think it's January 7th. It's on my website, so you can see that there as well. And I have the link. I'm going to put the link on this video. That's going to talk a lot about like creating income for people who are retired. But going back to this application, this is going to launch soon, and it's super, super cool. And it really will help people learn exactly all the stuff that I talk about, but in just a different format. Anyway, I hope this helps. I think there's no other questions. Thank you for watching. I appreciate your attention. If you have questions, drop them in the comments. Make sure you're subscribed to the channel, of course, and let me know what kind of videos. I've been doing a video every day for like the past 6 months. Let me know what you want to see. That way I deliver the content that you guys are looking for. Thank you so much, and have an amazing day.